The Canadian real estate market has been the backbone of the economy for quite some time now, as mortgage renewals approach for millions of Canadian households in 2025 and beyond. The health of the real estate market is crucial. So let's discuss why stable home prices matter so much for the entire Canadian economy. The Canadian real estate market is often discussed in terms of affordability, investment potential, and interest rates. However, what sometimes gets overlooked is how deeply housing ties into the foundation of the Canadian economy. Real estate is not just about where Canadians live, it's a massive engine that drives jobs, consumer spending, government revenue, and financial system stability. As mortgage renewals approach for millions of households in 2025 and beyond, the health of the real estate market is more important than ever. A decline in home prices might appear beneficial for buyers in the short term, but on a national level, falling values can create significant economic risks. Conversely, stable or gradually increasing prices provide a more secure platform for growth and recovery. Let's break down why this is the case. 1. Real estate is one of Canada's largest economic sectors. According to Statistics Canada, real estate, rental, and leasing accounted for over 13% of Canada's GDP in recent years, making it the single largest industry. To put it in perspective, the housing sector contributes more to GDP than oil, gas, or manufacturing. Every home sale generates additional spending on renovations, furniture, appliances, and professional services. The construction sector alone employs more than 1.5 million Canadians, much of it tied to residential housing. A slowdown in housing is not isolated. It ripples across the economy. 2. Housing wealth fuels consumer spending. For most Canadians, their home is their biggest asset. Rising home prices over the past 2 decades created what economists call the wealth effect. When people feel wealthier, they spend more. That spending doesn't just go into housing. It boosts retail, tourism, restaurants, and small businesses across the country. In 2020 to 2021, despite the pandemic, low interest rates and rising home prices supported strong consumer demand. By contrast, in 2023 to 2024, when interest rates rose and prices corrected in many regions, household spending weakened, dragging down growth. When house prices fall, people feel poorer. They cut back on discretionary spending, a dangerous trend during periods of weak economic growth. 3. The mortgage renewal risk. The Bank of Canada's rapid interest rate hikes since 2022 mean that more than 2 million Canadian mortgages will renew at much higher rates by 2026. Here's where falling prices create a problem. Negative equity risk. If your home is worth less than your mortgage balance at renewal, you may not qualify to switch lenders or refinance. Reduced flexibility. Falling equity limits homeowners' ability to consolidate debts, access lines of credit, or invest. Higher default risk. For highly leveraged households, renewing at higher interest rates while sitting on a depreciating asset increases financial strain. In short, lower home values at renewal time can trap families, reduce competition between lenders, and increase financial instability. 4. The fiscal link. Real estate and government revenue. Home transactions generate billions in tax revenue each year through land transfer taxes, especially in Ontario, and BC, HST, on new construction, property taxes, which fund municipalities, and capital gains taxes on investment properties. If transaction volumes and prices fall, governments collect less, straining budgets and limiting public investment in infrastructure, healthcare, and education. 5. The employment multiplier. Every home purchase sets off a chain of spending that supports jobs. A new buyer hires movers, renovators, electricians, and landscapers. Furniture and appliance retailers see increased sales. Professional services like realtors, mortgage brokers, inspectors, and lawyers all depend on transactions. Economists estimate that one home sale supports 5 to 7 jobs directly or indirectly. A drop in home values and sales activity means fewer jobs and slower wage growth. 6. Why stable or rising home prices are important. It's important to distinguish between unsustainable bubbles and healthy price growth. No one is arguing for runaway double-digit increases year after year. But for the Canadian economy to remain stable, home prices should at least hold steady or grow moderately. Here's why. Supports mortgage renewals. Stable or rising values ensure homeowners maintain equity, easing renewal stress. Protects the financial system. Banks and lenders face fewer risks from defaults or foreclosures when collateral values hold firm. Encourages construction. Builders invest in new projects when they know demand and pricing are stable, ensuring housing supply growth. Drives confidence. A housing market in freefall discourages investment and weakens economic recovery. 7. Lessons from the past. Canada has avoided the kind of housing crash seen in the U.S. in 2008, partly due to stricter lending rules. But history shows that when real estate markets contract sharply, unemployment rises, consumer confidence collapses, and governments are forced into emergency stimulus measures. By contrast, periods of stable housing markets often coincide with stronger economic growth. 8. What this means for the next few years. Looking ahead to 2025 to 2026, interest rate cuts expected later this year or early next may ease renewal pressures, but they won't solve equity concerns if values keep falling. Immigration-driven demand will continue to put upward pressure on housing, especially in Ontario. Government policy will play a critical role. Programs that encourage construction and support renewals will stabilize the sector. The key is finding balance, encouraging affordability without undermining one of the country's most important economic engines. Conclusion: Canada's economy is inextricably linked to the real estate market. Falling house prices may seem like a win for affordability, but they carry hidden risks. From mortgage renewal challenges to job losses and reduced government revenue, a healthy growing housing market doesn't mean unchecked speculation. It means stable, sustainable price growth that protects homeowners, supports renewal, drives employment, and fuels the broader economy. In times of uncertainty, ensuring the real estate sector remains resilient is not just about protecting homeowners. It's about safeguarding the Canadian economy as a whole. Thank you for watching. Feel free to share your thoughts and comments below. Thanks again for watching. If you want to learn more about the Canadian real estate market, make sure to check out our comprehensive guide on the topic. We cover everything from housing trends to mortgage rates and everything else you need to know to make informed decisions about buying, selling, or investing in property. Our guide is updated monthly with the latest data and insights from top industry experts. Whether you're a first-time homebuyer, seasoned investor, or anywhere in between, we've got you covered. So what are you waiting for? Click the link below to access our guide today and take the first step towards achieving your real estate goals.